Microsoft just hit a new record close after Azure grew 39%, Intel ripped 23% in a week, and SanDisk has a Wall Street analyst calling for $250. All three are winning the same trade, and none of them are Nvidia. Welcome to the Money Mind. Today we are doing a deep dive into three AI platform winners: the cloud, the chips, and the memory. Microsoft, Intel, and SanDisk. Forget the obvious Nvidia trade for a minute. These are the platforms, the picks, and the shovels that make the AI build-out actually run. Let us get into the numbers. First up, Microsoft. Ticker MSFT. The stock closed April 15th around $411, up more than 4% on the day on news of a major Azure AI infrastructure breakthrough. MSFT has rallied about 15% off its late March lows, and the stock is back near a record close. If Nvidia is the picks and shovels maker, Microsoft is the general store where every enterprise buys them. The numbers are massive. In Q2 fiscal 2026, Microsoft reported $81.3 billion in revenue, up 17% year over year. Intelligent Cloud hit $32.9 billion, up 29%, and Azure itself grew 39% year over year, 38% in constant currency. That is not a startup growing off a small base. That is a $400 billion annualized run rate cloud growing almost 40%. Think of Azure as an electric grid for AI. Every new data center they plug in sells out before it's even online. Here's what is new. Microsoft just launched its own proprietary AI models. May I Transcribe 1, May I Voice 1, and May I Image 2, all delivered through Azure AI Foundry. That is a big signal. It says Microsoft wants its own AI stack, not just OpenAI's. Benchmark just initiated with a buy and a $450 price target. The analyst consensus mean target is around $590. And the next earnings print lands April 29th, which could be a major catalyst if Azure holds its growth rate. Next, Intel, ticker INTC. The stock closed April 15th at about $94.94. It is up 69% year to date and 23% just in the past week. For a stock that was left for dead 2 years ago, that is a stunning comeback. Think of Intel as the factory that almost lost the contract and just won it back from the biggest buyer on the planet. The catalyst is massive. On April 9th, Intel and Google announced a multi-year, multi-generation partnership. Google committed to Intel Xeon 6 CPUs across its global AI training and inference infrastructure. They are also co-developing custom ASIC-based infrastructure processing units, what the industry calls IPUs. These chips sit between CPUs and accelerators to manage AI workloads at scale. This is the deepest Google commitment to Intel Silicon in over a decade. Here's the tension. The consensus analyst price target sits around $47, well below the current price. But Bernstein raised its target to $60 on server strength, and bulls at Wedbush and Morgan Stanley see AI CPU refresh cycles carrying Intel for years. The bull case is simple. Data centers need far more CPUs per GPU than most people realize. The bear case is that Intel has a history of fumbling the follow-through. Past rallies died on earnings, so watch the next print carefully. Finally, SanDisk, ticker SNDK. This is the spun-off memory business that used to be inside Western Digital. It makes NAND flash, the storage that goes into SSDs, phones, and increasingly into AI servers. The stock closed April 15th around $892 after a 7% pullback from $944. It is still up roughly 246% year to date. If Intel is the factory that got its contract back, SanDisk is the warehouse that just ran out of shelf space. The catalyst here is pricing. SanDisk raised NAND flash prices by more than 10% starting April 1st. Industry data suggests contract NAND prices could rise 70 to 75% quarter over quarter. That is not a typo. AI servers need massive storage for model weights and checkpointing, and supply has not caught up. Bernstein analyst Mark Newman raised his price target to $250 from $1,000. That is the highest target on Wall Street, and it implies about 50% upside. In his blue sky scenario, he sees the stock hitting $3,000. Here's the catch. Memory is a cycle business. Every historical boom has ended when new supply floods the market. Micron fell 5% and SanDisk dropped 7% on April 15th, showing how quickly sentiment can shift. The big test comes April 30th with fiscal Q3 earnings. If SanDisk confirms the pricing surge is sticking, the rally continues. If they sound cautious on volumes, the trade unwinds fast. Position sizing matters here. So ranking these three. If you want the safest risk-reward, Microsoft. A $1 trillion cloud growing 39% is unusual, and the next earnings print is about 2 weeks away. Second, Intel. The Google deal is a real cash catalyst, but the recent run means expectations are high heading into earnings. Third, in terms of risk, but potentially highest upside, SanDisk. The numbers are breathtaking, but memory cycles are brutal. Only hold if you can stomach a 30% drawdown. None of these are sure things. All three are exposed to AI capital spending, which could absolutely slow. This is not financial advice. Always do your own research before putting money to work. That is today's deep dive. If this was useful, hit like and subscribe for daily market analysis. Drop a comment with which of these three you are watching most closely. This is the Money Mind. We will see you tomorrow.